Hey guys, I'm recording this and we're in training Monday, May 2nd. So I'm going to go back through the volume lesson 2, and then I'll address a question for someone regarding lesson 8. Don't let me forget. Well, before I forget, I'll just say now that lesson 8 had some other JATS indicators coded into it, so that's probably why it did not work. So I will modify that template, so removing those other indicators and reissue just using the PT indicators. So I'll get that done a little bit later. But lesson 2, this is the long vol strategy that we put together earlier on, and it's been the most popular template for good reason. We're just going long vol, whether that's short or long, and taking short, easy, low-hanging fruit profit targets with momentum. And the PT indicator is what does the magic sauce. It dynamically allows us to take a percentage of a volatility envelope that we can designate. So we can put whatever size volatility envelope we want and then determine what percentage of that volatility envelope do we want. And if you just stick to statistical levels, you might be surprised with your work going forward, testing it. So this is just a simple 830 to 845 volatility envelope, and you'll need to code this yourself in Blackbird. My template will not work for your Blackbird. So this video, keep the recording and come back and watch how I code this. I'm going to go through each level one more time, and then we'll look at the results. So the first thing we're going to notice is we've got the Bloodhound template, lesson 2, high vol 2, and I'll make sure you have this template if you don't already have it. And in this template, long vol greater than 17, that just means that I'm taking volatility above the volatility threshold 17. And there are other requirements in here as far as slope must be long. So long vol, and we want to take short profit targets that are dynamically structured. And so this is an order set A, and I've got the risk larger than the profit target, which may surprise you. But since it's long vol, it needs more room to flex before it meets the profit target. So with order set B, if order set A is executed, we can determine that by putting a requirement that it not only be in the RTH session, but you can put your order status changed on here and change that to order set A profit target. So this means that if the profit target is filled, then this order set is allowed to be placed because it's placed after. So there's our condition. So you'll need to add that right there to that button, and also add a Bloodhound signal so that you can choose your template and whatever filter you want. This is RTH session. And then you can come in and choose the order status changed for the A profit target. So if that's filled and it's in the RTH session, you'll be able to place a trade. There are two cancel after conditions. These are very important for Blackbird. They allow the algo to release that pending state that we've placed the trade in, because once you have an order pending, it's got to have a resolution. So we're going to resolve that by either order set A if the stop loss gets filled. We can have the order automatically canceled. Or if there is a 1 bar turnover, we can cancel this order. We want to have this order filled on this condition, so that works out really well. So as soon as this condition exists, this order will fire off a second order, which allows us to get a little bit more of that range, that volatility envelope of what's happened over the last 14 sessions. So we're coming back in for a little bit more. And to use the stop loss, it's just using the indicator like an ATR in the indicator offset. You add it here, PT2, and then change your time range to true. Start time 8:30 and time 8:45 off the open. And you want to put your stop loss as a negative. So if it's negative, whatever you decide, you can put your own number there, 25, 35, 45, 55, whatever you like. For your stop loss, you can control that. So there is also a trailing condition, a couple of them. If this gets involved in a trade and there are 5 bars that close before the profit target or stop loss is hit, I like to just go ahead and move that to close that position out. The trade should work out well before 5 bars. And then another rule is if the stop loss in order set A is reached, triggered, then we can do an action of flatten position. And a final rule would be if the stop loss in order set A is reached, we can cancel the position. So flattening it and canceling it, I just want to make sure it gets done, not to have any little trigger in our algo that says that there's a pending order state. I want to try to get rid of all of those as possible. And so I put it in twice. Probably overkill, but it gets the job done. And then we have our order set C, which is our phantom order. And so in order set C, these are the requirements that have to all simultaneously be done together. You need your RTH time session to be in force. You need your profit target in order set B filled. And you need your stop loss in order set B filled, all at the same time. Well, you can see that that's never going to happen, right? Your profit target and your stop loss are never going to be filled at the same time. So this order will never execute. Okay. Now, should the profit target get filled in A or B, or the stop loss in A or B get filled, this C phantom order set will be in a pending state in Blackbird, one of those awful pending states. It's like they're very hard to isolate and kill, so we have to use some more logic to get rid of that condition. So we can cancel after 1 bar and then use our advanced logic and add another order status change to it, and say if stop loss is reached in A, to cancel it there. And there's some more cancellations down here. I can put the stop loss from A to cancel the order as the action, and also a separate one if the stop loss in B is filled, then to cancel this order. So making as sure as possible that this order set does not only not fire off, but it doesn't leave a lingering, you know, pending state. Why that's important is the pending states will not allow a signal to go through. It'll be stuck in pending, and until another opposite condition comes in that clears it, you're not going to get another signal. So it messes your algo up tremendously. So this has been cleaned up by those conditions, and we'll go ahead and right click and run the strategy. I'm running it over 150 days and a 15-minute time frame, and it's calculating, so we'll let this run. And again, this is not meant to give you guys an algo out of the box. It is meant for you to understand how to use the PT indicator with different ranges. You can do the same thing on a 30-minute range or a 60-minute range or a daily range that I'm doing with a 15-minute range. You could do it with a 5-minute range. So you're going to be able to see the fractal nature of trading once you start testing this logic on different time frames. So this is just one example on one time frame and one instrument. You can get your volatility threshold on all the instruments that you like to trade and run the same strategy on them as well. The little rabbits. Once you get inside your volatility envelope, then you're in great shape and you can get really good results like this. I'll go slower. So there was an $1,880 loss, but we were already up 15,000. Very clean. There was a $3,100 loss. So, you know, the goal of, designing a system is to be able to go inside that day. So like you would write down 2/15/22 so that you can go back and look at your chart and see why the algorithm failed on June 15th. In fact, we'll do that. June 15th, or no, that's not June, I'm sorry, February. Hello. February 15th. Okay. So we'll see what happened that day. It's a big miss. It's just a normal miss. Well, here's another big one on March 31st. So we'll look at those 2 days. And then you can, April's 22nd, see if there's something that can be done to mitigate that risk so that you don't incur that drawdown going forward. But overall, the strategy's extremely robust, to say the least. And I was running it this weekend in walk forward test mode, and it executed perfectly. There was no issue at all with the execution. It performed exactly as you would expect in walk forward mode in the instant replay. So take the time to, when I'll make sure you all have the most recent Bloodhound template, and then you'll have to go through and update your own Blackbird with those directions that I just gave you on this video. And again, on that lesson 8, I will get you the template for taking out the linear regression indicator, since you don't have it. Okay. So to look at those 2 days to see what happened, one of them was February 15th and one was March 31st. So let's scroll back to February 15th. There's the 21st. Here's the 14th. There's the 17th. Where's the 15th? There's the 16th. Looks like a whole bunch of up and downs in here. Let's see, a bunch of stop losses in here. Okay, it's all inside the one, and not only inside the one, but inside the initial balance. And it was just chop city, up and down, up and down, up and down in here. There was a huge iceberg, and it just chopped itself up right there. I can see what happened right there. So, which goes to show you that sometimes you need to put filters on here, and or limit your entry to a specific location for consideration, but that will happen. I mean, you get stuck in a wash-o-matic like that where it's just backfilling over each other. That's like the laundry cycle until it breaks out. Not pretty. So most of the time price will move away like this, break out, so that you can get into your trend and make your profit targets. See that? Get profit target, profit target. It's moving out, and that one that we got all the bad drawdown on was for getting stuck inside of that small range. So if that gives you any idea, for coding to get around that, you could easily set up a filter to go outside the 1 hour initial balance before taking any trades. Something like that, and then retest it. So to do that, let's take the strategy off. We'll do that real quick. I'll put the lesson 2 template on here. And we will add the requirement for it to be outside the 1-hour IB, so I'm going to add an indicator comparison and call this above below IB PT1. And so you'll have your price, and that would be a high-low. No, let's just make it a close. Get a close outside of it. And then have your PT3 indicator. And we want to make it a time range and make it 8:30 to 9:30 on the open. And PT1A, go long. PT1B, go short. Just like that. And so we can copy this vol 17 and call it outside IB and pop our little outside IB requirement in here. You see this. Oh. So the 1-hour IB is right here. So you're getting the down signals and it's up here. So you're getting the up signals. And put this on a 5-minute chart. Makes it easier to see and get more signals. So this would be your permissive to go short. And ideally, that's what you would like to see for it to go start running. But anything inside of it would not get a signal. So if we go back to that day, February 15th, here we go. Look at all this. February 13th, no signals inside of it. See how good it works. And here we go in here. February 15th, they're all no signals. So I would have saved myself all that drawdown that day if I had used this template. So what we can do is put this as a filter. So get the long short modifier out. And we're going to change the mode to difference, absolute. And that gets the shading that gives it a permissive. If this shading is on, then your other condition can be accepted as a signal. So there we go. Save my template. And I'm getting an error. Hang on one second. I just have to refresh. There we go. And so now if we're above the 1-hour IB, you can get a signal. So let's rerun this in our strategy. Put Blackbird back on here. Back test it and see what this did to the P&L. and we'll change it to the outside IB entry signal, requiring that filter. I'm also running this on a 5-minute instead of a 15-minute, so I'll run it on both. Okay, here's the 5-minute. Ooh, looks good. So that improved it a lot. And the drawdowns are lower too, 1,700. Killed two birds with one stone on that, right? That looks real good. Let's go back and look at February 15th. Look at that. Big difference. hmm So that's the iterative process that you might want to undertake, and then maybe go back and look at some of your other dates and times and do that same process. Go back and look at your chart, see if, another filter could be applied, like, you know, a trend filter or VWAP or a moving average, something like that, and just experiment. Also experiment with your ranges and, like I said, try this on a 30-minute chart. Um, and different volatility thresholds. So you would change, if you did a 30-minute time frame, you would change the time frame here from 8:30 to 8:45, change that to 9, 8:30 to 9, or whatever time zone you're in. I mean, obviously, if you're in California, you're going to put this, at 6:30 to 6:45 or 6:30 to 7. But you just want to get that first hour of trading, whether it's 15 minutes, 30, or 60 minutes. You can do 8:30 to 9:30 and get a very good volatility envelope, and then run all three together to even get triple the kick out of your effort, right? So you're running the volatility envelopes together. So how that worked, interestingly, when I tried running it in my testing before, was I noticed that I could have a longer trend in place and weave in and out of those shorter time frames, especially if you have another template system similar to the cross recross template, where you can set that linear regression tube up, and hit it coming down or buy it low going up on that upper or lower tail, trailing that outside band. But this works, obviously very well. And if you have any questions, let me know, but you're going to have to code your own Blackbird. I can't give you a template. You'll just have to come in and set your settings up like I've shown you in the video. And I'll have, you know, my Skype here. If you run into any questions or problems, give me the questions and we can address them the next week. But y'all should go through the exercise of trying to figure some of this out on your own. You need to learn the platforms. So any questions, guys? Okay, well, that's about it. Lesson 8, I'll take the linear regression off and let you see it so that you can understand those principles for that um, training session. And if that's it, then we'll call it a day. Very short and sweet. So I appreciate it. Hope y'all enjoy your templates. Today, I mean, I guess we could take a second here and look at this for Tirith, to show you, to confirm how to put the data together. So like on a 15-minute chart, I use about 150 days. If I need to do a monthly or a monthly distribution or a quarterly, you're going to want to use a daily candle. Okay. So if you want to do your top-down analysis, start with the daily candle and put about 3,000 days on there. And I'm going to put the new template in here right here. So thanks for reminding me here. Let me just pop that in here for you right now. So that it's the same template. Well, yeah, here, hold on just a second. Hang on. It's Bloodhound lesson 2. Hang on a second. I just want to make sure, one quick second. Yeah, there's no other indicators in it. You can use that one, right? Just put that in your Bloodhound template folder. So there's your lesson 2 that I created, the Blackbird template. You'll have to create your own Blackbird template. And it seems like you probably want to load some data. Edward is saying he's having trouble with the strategy tester. In your, that's just a NinjaTrader issue, baby. You need to go and download some data. So you can click Tools, Historical Data, and Load. Select your instrument in queue and put, quite a bit of data in, maybe a year, and make sure it's on minute and hit download. So I'm not going to run that because I've got a strategy going, but download your data. And so that would solve that. Absolutely. I'm not sure, Edward. Why don't you send me a time tomorrow between you're available in the afternoon between 1 and 3, and I will take a look at your screen. It is, it is, I am not available for platform training though. You know what I'm saying? Y'all have to take the time to learn Bloodhound and write NinjaTrader. So what you're experiencing probably, you can't use my template. You have to create your own. My Blackbird templates won't work for you. So I'm showing these templates to you as examples that you can see visually, but you have to create your own template. So you can take screenshots of the one that I sent you. So when you get my Blackbird template, you can load it in Blackbird, right? And take screenshots of each of the components, okay? So that you can go back. You'll have to hit clear and create your own from scratch to make it work. So try that first. Yes, sir. Yes, sir. That's exactly what it is. Yes, sir. Um, you take the one that I showed you as an example to give you a guide, and then you'll learn by doing this exercise how to do it yourself and what you're doing. And I'll be glad to come in. Shoot me a Skype if you still need me to meet with you. And any of you guys, if you need a question or something, just Skype me and ask me if you can meet the next day, or a couple of days. I may have another appointment, and then I'll get back to you. Be glad to help out. And you can always send a, you know, um, question to me. Maybe I can help you figure something out. Be glad to. But as far as, putting the indicator on the screen, let me just show you this real quick, baby. I'm going to take the strategy off real quick so I can show you something on the other chart. Well, here, let me cancel that. Let me just move this to a new window. Okay. So in the indicator, when you've got daily data and you put any of these distributions on your chart, realize that a higher time frame like a daily requires a monthly, not a minute chart. Use your minute charts on like a 60-minute or 240-minute or less. But if you're doing like a monthly or a 45-day, you want to have it on daily data. And this is very helpful because if you understand the logic, you can see that going back when you had the QE, the quantitative easing, that anytime it got below the tails, they always came in and bought it. That's by the dip, right? So anything really below the 1 is a buy to the dip, but especially, these tails are normally good places to come in and very lucrative. But now, I think we're selling the ones. Personally, I think we are. We might be in a bit of a correction because it looks like they're selling the ones to me, and you might, be aware that they certainly normally buy the dip, and that's why everybody you've heard has been warning you to go long. But if we're selling them, then this has got to break, right? We're at a very major support level, and it's broken. So any time that it pops back up to the upper 1 coming down, this is going to be going down. Find your 1 channel. So anytime that you can position, an entry in your zone, right? And see that it's breaking lower. What I like to do is measure the range apply it to go down. And so I'm looking for a, measured move because I'm, extremely anal. And if it doesn't, make my range, I just will go crazy, right? So at least one time. If we've broken the range, I'm going to expect the market to take it down to one time the range, or I go nuts. So we'll see. See how it gets below the range and they take it right back up? So, just be aware. And you can measure your ranges just like I did, um, by taking your prior distribution and shifting it lower, either the one or all of it or half of it. Half of it works really good. So if you take, the midway down, will give you an excellent target to trade to below your tail. Target reached. And you can go back and just look at your prior ranges, what your the calls are different, but the puts, when they got below the distance, how far would it go? And it's usually a measured move of your upper range, because algos are very algorithmic, right? So they have to have a pattern to trade to, and that might have pretty damn look spot on. But that's what they do, see? All right, y'all can do that yourself. And that's it for me today. I hope y'all have a great day. Practice with your template, and good luck. It's not a canned algo. I'm not recommending that you trade it. I recommend, in fact, that you use your own risk reward and test it before ever putting it in the market to trade it. Edward, I don't send you a Blackbird template to use because I don't want you taking my stuff and saying I'm giving you an algo to trade. You have to create your own from my indicator, and I'm just showing you examples of how you can use it in Blackbird. Okay, baby? All right. Y'all have a great afternoon. I appreciate it, and I appreciate you. And good luck. We'll talk to you soon. And Edward's typing something, so hang on one second. Oh, okay. Fantastic. Thank you so much. I appreciate it very much. Appreciate it. Appreciate you. Thank you so much.